what it looks like, and I'm also going to teach you something about depth of market. So right there, I'm training your eye and his eye to look at that as an entry. So right there, that's how you would enter. Your stop would go above the fair value gap high candle, as indicated here. So relatively small terms of handles per risk per contract. So I'm preparing him to use his funded account journey here. So we have displacement to the downside. And over on the right-hand side, I'm going to annotate that 4113. I've already tweeted it well before I did all this. So that we can see there's no necessity for depth of market or DOMs or ladders or level 2 data. Liquidity can't hide on the charts. And here's a secondary pyramid entry. So once it goes up into that fair value gap, that would be an additional entry right there. And stock would remain where it was initially. And we would wait now for displacement, trading into 4113. Sell side liquidity rests below that. So as you can see, I have highlighted 4113 on the right-hand side on the DOM, depth of market. It's pronounced DOM, not DOM. Depth of market. And again, you don't need this stuff. I called this pull liquidity and draw liquidity before your depth of market even starts animating around that price level. So I don't use these gimmicks. I don't use these things. It makes you feel informed, right? Looking at it. And here we go, dropping right into my target. All the orders coming thick around 4113, 41, 12 and 3/4. And there you go.